where we sit right now, I almost believe you almost had to come into this kind of long. I don't know if you reach for it right here. I think you're going to see a little bit of an unwind of some shorts in the market that were positioning for a break below the October lows. I think two things that are very encouraging. You've got a lower dollar, and you've got a 10-year yield, which is now sitting somewhere around 303, 304. I would point towards maybe some of the low-hanging fruit. Some of that low-hanging fruit you could possibly find in the Russell 2000.
Now? Are you saying that low? Are you saying now, though?
Yeah, I would say.
So going into this, we're up 400 points, and you're saying now is the time to do it.
No. What I said was you had to come in. You had to come into this long. I think if there was one area that I would look at right here and say, okay, up 400, Pete, I'd be willing to look at. Maybe it's the Russell, because you've seen the significant underperformance, and now you're getting a lower dollar, and you're getting a lower 10-year yield, and that correlates to outperformance in the Russell. But the rest of it, as I said before, I think you had to come in long. I don't know you reach for it here.
Yeah.
It's interesting, Judge, that they nailed right to it yesterday. You and I, top of the show yesterday, talked about the spider trade. There was a very large trade where they shorted the 271.50s in order to buy the following week 272s.
Hey, Scott.
We are right there. We ran right to that level. It's like they had the script.
Can we put a little chart on the bones of what these guys are talking about? I think we ought to call up, you have it up there, the dollar as well, which against the euro has come up quite a bit. You can take a look at that. Everything is spiking either way. There's the dollar index. And then go to the 10-year, Scott, which is down, we just mentioned, was it by Steve here?
Drop in yields.
You can see the drop in yields out there. The markets are reacting around the world to this statement. I would caution a little bit. Sometimes you get a bounce after something in the market. It overshoots a little bit. It could come back. But I think the conclusion that you've drawn us to, Scott, is that this is seen as a dovish or a backing off of perhaps the most hawkish interpretations you could have had of Fed policy.
This is being seen of Powell blinking. That is what the market,
No. Absolutely not.
Yeah.
No, absolutely not. Because
why not?
Because if you go back, as recently as yesterday, two different Fed chairs talked about the economy, right? You had Bullard out there, you had Cleared out there, right? And they talked about exactly, and we highlighted what they said yesterday.
Who cares what they said? Powell is the one that matters most.
Which was before the president came out with his tweet.
Who cares
and then
what they
Powell's
said?
got this.
Powell's the only one that matters.
Well, I will tell you this on top of what John was talking about. But, I mean, Scott, the one thing, and the reason I was pushing back a little bit with Joe is, okay, we're up 400 points. He said you come in leaning. We should have said that yesterday then. Yeah, but that's a comment for yesterday.
We said that last week.
That's not true. Not if you think that what the Fed chair just did was effectively end the correction and set the stock market up for a rally into the end of the year at the very least.
There are two elements that everybody's sort of forgetting all of a sudden out of nowhere. We've completely forgotten. Two elements. One, Powell. Two, the G20, right? I mean, everything we have seen going into the end of this week, Scott, we talked about it yesterday. John talked about those spy calls. Those expire. I mean, I'm talking about 1 week out. They bought 20,000 on unusual activity the other day for you, from Minneapolis, the XLI. They buy 20,000 XLI calls. They also buy the SMH yesterday, 25,000 of those. Then you start looking at the spiders, 35,000 of those. But everything is in very, very short, extremely short time frames. That's the thing you have to realize, and I think it's Powell's number one, number two is G20.
That's exactly what I've been saying, and I just think what you're seeing now is you're going to see short covering in the market. You're not racing towards anything. The consequence of a lower dollar and a lower yield takes you to the Russell 2000, and if you're looking to initiate something, maybe that's the place you do it, but I don't know if you initiate right here. You're waiting for shorts to cover.
But you don't know what's going to happen on Saturday at G20. We could be sitting here. Frankly, we could be sitting here tomorrow if you're on the show, and Trump could have said something, no chance for a deal. So as I started my comments with, we've got one part of a two-part scenario.
Yeah. This is arguably
can I
the
just make
most
a point
important
here,
part. Let me just.
I want to just lay this out. I have not seen in all of this otherwise tumult in markets much change in the outlook for the probabilities of the Fed. I'm still looking at here an 80%. Now, this may adjust a little bit later.
December happens.
But December is still 80%. I'm still looking at what looks like a 60% probability of June. And it may be that the futures market in the Fed funds already adjusted to this reality because it understood that there was a new reality. I want to point that out, Scott, that the betting on the Fed is pretty much 1 to 2 next year when it comes to rate hikes.
I patently disagree with all of you who suggest that Powell didn't blink.
I say he didn't blink. I say he's the bigger man.
He just changed arguably the most important part of the language that upset the stock market.
But
what Jim Cramer has been saying and what he's tweeting as well, despite what you may hear, Powell blinked. He took himself off the table as a reason for a longer bear market.
But wait a second.
Why isn't that true?
It's not true because we don't know the answer. Powell could not have intended the correction. He could have screwed up, frankly, on his initial comments. Doesn't mean he blinked. It meant that he, as Steve said, he screwed up. The language was unintended.